Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if that accounting jargon is hiding something juicy or just more paperwork that puts you to sleep. Today, we're diving into a company that is dealing with a major deal, but some folks are not too happy about how it is being presented. So, why are we talking about ZimVie Inc today? Well, they're in the middle of a big merger, and it seems like some shareholders are saying, show me more when it comes to the details. This report is basically an update clarifying some of the information that was shared in their proxy statement, which is like the official booklet explaining the merger to the company's owners, the shareholders. This whole situation stems from ZimVie Inc, agreeing to be bought out by Zamboni Parent Inc through its subsidiary Zamboni Merger Co Inc. It is a classic merger where one company, ZimVie, will become part of a larger entity. This kind of deal needs shareholder approval, and that is where the proxy statement comes in. But here is the drama. Since they sent out the initial proxy statement, a few lawsuits have popped up. Think of them as shareholders saying, hey, we think you forgot to tell us some important stuff in this merger explanation. These lawsuits are not just in one place, they're in New York and even Florida, and they're all pointing to the same issue, alleged missing information in the proxy statement. Now, the company ZimVie says these lawsuits are baseless. They don't believe they've done anything wrong, or that they need to reveal more. However, to avoid delays and the headache of a long legal battle, they've decided to add some extra details to their original proxy statement. It is like saying, look, we don't have to do this, but to keep things moving smoothly, here is a bit more info. They are very clear though, this is not them admitting any fault. The really interesting part of this update, and what we'll focus on, are the specific details being added to the financial advisor's report. This is where their financial expert Centerview shares how they valued the company. You see, when a company is being bought, an independent advisor often gives an opinion on whether the offer price is fair. And that is exactly what is being clarified here with some numbers that might make you rethink things. Let us look at what is being added to the selected public company analysis. This is where they compared ZimVie to similar companies traded on the stock market. They re-adding details about how companies like Align Technology, Delaware NT Splice Sirona, and Henry Schein trade based on their expected earnings before interest, taxes, depreciation, and amortization, also known as EBITDA. For example, Delaware NT Splice Sirona trades at about 6.8 times its 2025 expected adjusted EBITDA. This gives context to how the market values companies in this sector. Now here is a key piece of information being added when they calculated the value per S-share based on these comparisons. They now saying the number of fully diluted shares of ZimVie as common stock is approximately 30.5 million. This number is crucial because it is the denominator in the per share calculation. If this number changes, the implied price per S-share also changes. They also refined the range of implied per share equity value to be between around $14 to $18.75, which is quite a bit below the $19 merger consideration. This gap is likely what some shareholders are concerned about. Next up, the selected precedent transaction analysis. This looks at similar companies that have been bought or sold in the past here. They re-adding more specifics about these deals. For instance, a deal involving Patterson Companies Inc. in December of last year was valued at 9.9 times its adjusted EBITDA. Another deal, Vantive from August of last year, was valued at 8.8 times its adjusted EBITDA. All these numbers help build a picture of what similar companies are worth in the M&A market. Again, they are clarifying that they used approximately 30.5 million fully diluted shares for their calculations in this section as well. And they are adjusting the implied per share equity value to be roughly between $17 to $21.25. Notice how this range now slightly overlaps with the $19 merger price, but the lower end of this range is still below the offer. This kind of detail helps explain how they arrived at their valuation opinion. Then there is the discounted cash flow analysis. This is a more in-depth method where they project the company's future cash flows and then discount them back to today, S value. They are adding details about their assumptions here, like discount rates from 11.5% to 13.5% and perpetuity growth rates of 2.5% to 3.5% to 3.5%. They also clarifying the company S-Cash, a promissory note related to a previous sale of their spine business, and their debt as of the 30th of June 2025. This whole calculation is about estimating the company's intrinsic value based on its ability to generate cash in the future. Another addition is the precedent premium paid analysis. This is a bit different from looking at multiples. Here, they examine how much extra buyers have typically paid above the market price when acquiring similar companies. They re-updating this to say that looking at transactions since 2020, with values between $500 million and $1.5 billion, showed a median premium of 39% and a mean premium of 45%. When they applied a range of 25 to 65% to ZimVie, stock price before the deal was announced, it resulted in an implied price range of about $10.5 to $14 per S-hair. Again, this lower range is less than the $19 offer. And finally, they've added details about analyst price target analysis. This involves looking at what Wall Street analysts are predicting for ZimVie as stock price. They reviewed 4 analyst reports which showed price targets ranging from $9 to $16, with a median target of $10 per S-hair. This is also below the $19 deal price. Beyond the financials and advisory opinions, there is a section about new management arrangements. This is important because it addresses how the company's top brass might be treated after the merger. Right now, they're saying no new employment or compensation deals have been finalized for the executives with the acquiring company, Archimed. However, they are leaving the door open for discussions and potential agreements regarding future employment or consulting roles after the merger closes. This is a common area where shareholders look for potential conflicts of interest. So, what does all this mean? ZimVie is facing shareholder lawsuits claiming their merger disclosures are lacking. They were responding by adding more details to their financial advisor Valuation report. While the company maintains it is not legally required to do so, they are doing it to smooth the path for the merger. The added financial details from their advisor, Centerview, provide additional data points on the company. Valuation, highlighting ranges that are, in some analyses, lower than the proposed $19 per S-hair merger price. This could be seen as validating some of the concerns raised by the plaintiffs, even though ZimVie denies any wrongdoing. The company's direction with this merger is clear to be acquired. The strength here is that they reactively trying to navigate the legal challenges, albeit by denying fault. The weakness, however, is the ongoing litigation itself, which can create uncertainty and potentially delay or impact the deal. A key opportunity is successfully completing the merger and realizing the benefits for shareholders and the new parent company. The risks are numerous, from further litigation to potential deal termination, as outlined in their forward-looking statements. In my opinion, the core of this story isn't just a merger. It is a company trying to manage shareholder dissent by providing more transparency, even while insisting it hasn't made mistakes. The financial advisor, updated analysis shows a range of values that, at times, dip below the offer price. This is the kind of detail that makes investors scrutinize deals. While the company is firmly denying any liability, the fact that they are willing to supplement disclosures suggests they reprioritizing the completion of the deal over a protracted legal fight. Alright, that is our breakdown of ZimVie Inc. latest filing, what is your take on these numbers and what they signal for the company? Future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.